That is an 83.3% increase in listings. If you thought last month's numbers were a little bit scary, I can't wait to show you what the May 2024 market update has brought to us. Unfortunately, things have not gotten much better. Although last Wednesday we did get our first rate reduction in 4 calendar years by the Bank of Canada, it was only 0.25%. So for anybody who is currently on a variable rate mortgage, this is only really going to give you about $15 per 100,000 mortgage amount in relief. It's not a big amount of relief, but for some, it might be just what they needed. There are already some speculative articles out there suggesting we might get a total of 4 rate reductions, including the last one, for the rest of the year. So 3 more after this point. If they are all coming through at 0.25%, we might see a 1% reduction, which in fact will give some of these variable rate owners much more relief that is long overdue if they chose to go the variable route. My name is Mike Carpino. In today's video, we're going to actually look at the May 2024 market report from the Toronto Real Estate Board. We're just going to break down the comparison year over year. If you want a specific market update, like a Brampton, a Mississauga, a Georgetown, or a Cambridge, Ontario, for example, you can head to my channel and there are going to be plenty of other market updates more specific to the area you may need. This is just going to be a general overview of what the numbers have done, comparing it year over year. Now, before we get into the video, my name is Mike Carpino. If you want some education on the Greater Toronto Area real estate market, click the first link in the description box down below. I'd be happy to help you navigate the real estate market and figure out how I can assist you best in your transition to become a homeowner or to make that jump from your first home to your next property. The first thing we're going to do is read the Realtor's release with the May stats from the Toronto Real Estate Board. So it'll be on the screen right here beside me or covering my lovely face, and let's get into what the real estate report says here. So Toronto, Ontario, June 5th, 2024, May home sales continued at low levels, especially in comparison to last spring's short-lived pickup in market activity. Home buyers are still waiting for relief on mortgage rates front. This was obviously just before the release of the 0.25% reduction by the Bank of Canada. Existing homeowners are anticipating an uptick in demand, as evidenced by year-over-year increase in new listings. With more choice compared to a year ago, buyers benefited from more negotiating room on prices. Recent polling indicates that homebuyers are waiting for clear signs of declining mortgage rates as borrowers' cost decreases over the next 18 months. More buyers are expected to enter the market, including many first-time home buyers. This will open up a much-needed space in a relatively tight rental market, says the president, Jennifer Pierce. Greater Toronto Area Realtors reported 7,013 home sales through the MLS system in May 2024. This was a 21.7% decline compared to 8,960 sales reported in May of 2023. New listings entered into the real estate system amounted for 18,612, which was up by 21%. So not only are we seeing a 21.7% decline in sales, we're seeing a 21.7% increase in inventory. You can see where the issues are already getting started here. The MLS Home Price Index Composite Benchmark was down 3.5% year over year basis. The average selling price was $1,165,000, which was down a small 2.5% over the May 2023 result, which was $1,195,000. On a seasonally adjusted monthly basis, the average selling price edged up slightly compared to April 2024. So we're slightly up from last month, which is not saying a lot because we were supposed to get a spring, quote unquote, spring market, which we actually have not seen. And as we are doing this video here, we're already in the second week of June, so we have lost that spring market. While interest rates remain high in May, homebuyers did continue to benefit from slightly lower selling prices compared to last year. We have seen selling prices adjust to mitigate the impact of higher mortgage rates. Affordability is expected to improve further as borrowing costs trend lower. However, as the demand picks up, we will likely see renewed upward pressure for home prices as competition between buyers increase, says the chief market analyst, Jason Mercer. In order to have an affordable, livable region over the long term, we need to see a coordinated effort from all levels of government to alleviate our current housing deficit and to provide housing for new populations moving forward. On top of this, governments need to ensure the delivery of infrastructure to support our growing population. The economic health and livability of our region depends on a timely completion of public transit projects, including better transparency and clear timelines on the completion of the Eglinton Crosstown LRT, says TREB CEO John D. Michele. So, we have read their press release here, and obviously listings are up 21%. Sales are down 20%. This is not great. It's not unexpected, especially if you have been paying attention to the real estate market over the last 6 months or so. What we have seen is people are only selling when they really need to sell, and buyers are only buying when they really need to buy. And because there is no pressure for a buyer to pull the trigger right now, we're seeing a lot of the listing inventory build up. Now, it's specifically in one category. If you own a detached property in the GTA or a semi-detached property or even a freehold townhouse, you are going to have a lot better luck selling that property in a 30-day time frame than you would if you own a condo. The buildup of condo inventory is absolutely insane in the Greater Toronto Area, and I believe it has just hit its all-time high of condo inventory. Now, before I go ahead and show you these condo numbers, especially in the Toronto core, what we're going to do is we're going to look at the numbers from the 416 and the 905 just to show you what those average prices are in the month of May 2024. So as you can see here on this chart, in the month of May, the detached homes, there were a total of 3,200 sales. In the 905 region, there were 2,387. And in the 416, there were 851. The average prices, as you can see to the right-hand side, 1.8 for 416 and 1.3 for the 905 region, totaling an average, if you're using that between the two, of 1,506,000. Now, that total number to me is really irrelevant. It just matters on where you were looking to transact. What does an average between the 416 and 905 actually do for you that is going to benefit you in the long term? Now, when we're looking at semi-detached homes, there were 274 semi-detached homes sold in the 416 versus a 342 that were sold in the 905 region. 1.4 Toronto pricing, 905 region, 979. Townhouses, 255 in the 416 versus the 894 in the 905. Average prices here, $1,044,000 versus 919, so over 100,000 difference between the 905 and the 416. Condos here, this is the big one. So we're looking at 1,297 condo sales in the 416, 695 in the 905 region. Total irrelevant, but 1,942 condos sold across the GTA. Average prices here, so 905 region, 657 versus a 767 in the 416. Now let's take a peek at the year-over-year change, which is ultimately very important when we're looking at the grand scheme of things. Month to month, yes, some things matter. Year-over-year is when we really like to look at that big picture. So if we're looking at the percentage change in sales, look at all these categories. We are down across the board. 416 and 905 in every housing category. So detached, semi, townhouse, condo, all down. Let's look at the average prices. 905, all down 3.5%, 9.6%, 6.9%. And obviously it continues on with the condos at 3%. In the 416, everything is down except for the semi-detached category, which is up 1.3%. But what is this ultimately telling us? It's telling us that the housing market is down from where it was last year. Obviously, we know that based on the stats that we just went over. Now, let's take a peek here. These are some big things we need to consider. Looking at a year-over-year summary, we got 2024 and 2023. Now, this month you had 7,013 sales, GTA, 8,960 in 2023. So you're talking 2,000 sales difference year-over-year. Listings, we've got a bump here from 18,612, and last year we had 15,363. So we are up 3,000 sales. So that's that 21%. Active listings, unbelievable. Last year, this time, active listings 11,869. This year, 21,760. That is an 83.3% increase in listings. The average price, we're not too worried about it. It's down 2.5%. The days on market are fairly similar. You're going to add about 5 more days to sell your home now compared to what you did last year. All right, now let's take a look at something that when we're looking at the numbers, obviously our detached, our semi, our townhouses, they're not so bad. But the condo inventory, this is what's really skewing a lot of the data, and I want you guys to see how crazy it is. Let's just use all the Toronto Real Estate Board areas. There were 1,942 condo sales. There were 5,844 new listings. There's a total now of 8,183, so just over 8,000 active listings. Obviously, the big bulk of condos is in the Toronto area. So I want you to see what happened last month. We had 1,297 sales out of that 1,900 that were sales in Toronto. The amount of new listings that came up, 4,131. And the amount of active listings is 5,798. So you've got 5,798 active condos out of the whole 8,100 across the Toronto Real Estate Board. Toronto condos are not moving. What is the issue here? Ultimately, it comes down to a lot of the builders are building smaller condos, and these are potentially investment properties for people, but they're not units that people necessarily want to live in at all or long term. They're essentially units that attract investors. The government has definitely made some changes to avoid investors getting into the market, or to at least deter them from doing so. And while doing that, we are building up this condo inventory that is not moving. If you're to put a condo on the market today, it's going to be extremely difficult for you to get a really, really good price, especially if you have multiple units for sale that you're competing with in the same building or in the same pocket, depending on where that condo is listed. If you price it right, if you do the proper media, if you have everything on point, you still will sell this condo, but you're not going to get these outrageous prices a lot of the time. You're going to have to understand that before you even go ahead and put your property on the market. The other issue here with this huge condo buildup is people are deciding to rent instead of buy. And they're deciding that because they're looking at their first home and they're saying, I don't want to be in a condo for my first home. Whether that is a smart reaction or not, that's the reaction that we're seeing a lot of the time. People are not willing to have a condo for their first property. Unfortunately for them, that is all that is available for your first property if you want to stay in Toronto. If you leave Toronto, by all means, you might be able to have other options like a condo townhouse or a freehold townhouse, even a semi-detached, depending on what area you are willing to move to and how far away from the Toronto core you're willing to go. And people who are hoping to get in the market, they really do need to understand that it's a progress. You're not going to have a detached home or semi-detached home for your first property. Ultimately, you're going to have to start with a condo if you want to get into the market based on price point. It's just unaffordable, especially with a single income for most people, to get into anything but a condo. If you have a couple, if you have two friends, potentially you might be able to hop over this condo market. You're going to have bigger payments, there's no question, but you might be able to avoid getting a condo for your first home. But I think a lot of the buyers ultimately need to sit down with themselves and say, hey, if I do want to live by myself and if I want to be a home owner, I have to buy a condo. Now, it might be just a short-term fix, a 3 to 5 year thing, but you need to understand, you want to start to build up some equity. You need to do the numbers to make sure that over a 3 or 5 year span, once you pay your taxes, your fees, everything, you are potentially making some money on it, because you can't guarantee that the condo market will go up with all of this inventory. And you need to make a smart financial decision. Although, if you do decide to rent instead, it's not like you are going to be getting a great gain from the money that you're throwing away on your rent. You have to really do the calculations properly. How much rent are you going to be paying? What are your utilities going to be? Compare that to being a homeowner, what your expenses, what your mortgage is going to be, what your equity that you're going to be building up is. And if you choose to rent, you need to use that difference in cash and invest it in the market or something else where you can actually make some money and call that your equity if you were a homeowner, for example. So this is where we're kind of at. If I can be of any service to you in the Greater Toronto area, looking to transition yourself or get yourself into the real estate market, click the first link in the description box down below. I'd be happy to assist you navigate the real estate market. Thank you so much for watching this video, and I hope it opens your eyes up a little bit more on what's happening in the real estate market, what is going on, what you can potentially do to take advantage of it, and how much the inventory has changed from just a 1 year time frame. Thank you so much. I will see you in the next video. Bye for now.